Hello, my friends, and welcome back. Thank you for being with me again today. I got some very gloomy news here, and they have to do with the economy. And let's get into it. This article comes from the Market Watch from June 17, 2022, updated, and this is the title. The economy is going to collapse. Good, huh? Says Wall Street veteran Novogratz. We are going to go into a really fast recession. Ready? Ready? Go like it. Um, Not good. So, veteran investor and Bitcoin bull Michael Novogratz doesn't have a rosy outlook on the economy, which he described as headed for a substantial downturn with the likelihood of a fast recession on the horizon. And I'm quoting, the economy is going to collapse, end quote. All right. So Novogratz told Market Watch, and I'm quoting, "We are going to go into a really fast recession." And you can see that in lots of ways, and you can see that in lots of ways. He said in a Wednesday interview before the Federal Reserve decided to undertake its biggest interest rate hike in nearly three decades. History says the next bull market is just months away, and it could carry the S&P 500 and to the 6,000 level, according to the Bank of America. Housing is starting to roll over, he said. Inventories have exploded. There are layoffs in multiple industries, and the Fed is stuck, he said, with a position of having to hike interest rates until inflation rolls over. Central bank policy makers agreed to deliver an unusual 0.75 percent pointage rate increase, including a closely watched two-day policy meeting, with a move that would push the Fed's benchmark federal funds rate rising to a range between 1.5% to 1.7% as it steps up the effort to quell an inflation rate that is hovering around a 40-year high. It was the largest increase in the central bank's policy rate since November 1994. Before the Fed announced its decision, Novogratz speculated, accurately, it turned out that the central bank would lift interest rates by 75 basis points and that the market would rally on that news. He also predicted that the stocks will sell off in the coming days. And I'm quoting, "They are hiking into the popping of a bubble." They are hiking into the popping of a bubble, Novogratz said, referencing the soaring price tags on luxury Swiss watches and other assets. So far, the noted investor's prediction has played out, with the Dow Jones Industrial Average DJIA negative 0.12%, rising more than 300 points or 1% after briefly running its gain to 600 points after the Fed meeting broke up the news and the news conference broke up and a news conference hosted by Chairman Jerome Powell got underway. The S&P 500 SPX 0.22% advanced nearly 55 points or 1.5%. The Nasdaq Comp 1.44%, bested both with its gain of 2.5%. On Tuesday, Novogratz, chief executive of crypto merchant bank Galaxy Digital, was negative 0.22%, drew parallels between the 1998 collapse of high leverage LTCM fund and the current implosion playing out in assets such as Bitcoin, negative 1.05%, and Ether, a negative 1.54% on the Ethereum blockchain. The tumble of long-term capital management sent stocks waves through global financial markets and ultimately required a multi-dollar bailout by Wall Street banks. Okay, so we're in big trouble. So the economy is going to collapse. I didn't go that far. The economy is going to collapse. I didn't go that far. I thought it was going to be a big devalorization of the dollar due to the very high inflation, and the economy would not be able to sustain anything. It's going to shrink. I saw another article where it says that actually whatever they predicted is even fast, is going to occur faster. The collapse and the shrinking of the U.S. economy they were talking about. So yeah, and who are we gonna blame for this? 3, 2, 1, go. Putin, right? Yeah, okay. And then make sure you go and vote. All right. Well, this is the situation. Going to collapse, going to a really fast recession. Good luck with that, guys. Put your seatbelts and let's go. Thank you very much for being with me again today. Stay strong, stay smart, look for the truth, and be just.